This is E2B, Energy to Business, a podcast by Opportune, where we bring you in-house expertise that serves all energy sectors. We examine emerging financial and technology trends and provide a broad perspective on ways to stay ahead, create opportunities, and execute market strategies.
Hello, everyone, and welcome to another episode of E2B, Energy to Business, an Opportune podcast. I'm your host, Daniel Litwin, the voice of B2B. And folks, thanks so much for joining us on another episode of the show. We really appreciate you listening along to some industry thought leadership here from the Opportune team. And per usual, we've got some big, heavy-hitting topics to break down. And before we jump into the meat and potatoes of the show, let's make sure that we're getting all the Opportune content we desire, right? So if you want some previous episodes of the podcast, or you want to find out a little bit more about Opportune solutions and services in this space, make sure you're heading to our website, opportune.com. And also subscribe to E2B on Apple Podcasts and Spotify. You'll find a full catalog there of previous episodes. Plus, when you hit that subscribe button, notifications when we drop new ones.
So on today's episode of the show, we're going to be discussing ASC topic 842 leases, and specifically the impact to private companies as they adopt this standard. The fundamental goal of this topic and its various iterations is to make sure all leases with a term of greater than 12 months are recorded on a company's balance sheet, whether it is an operating or a finance lease. So with the update to the codification, we wanted to get deeper on why these changes are happening and how private companies specifically, especially in the oil and gas space, should strategize to transition effectively to ASC 842. So to break down these critical changes to the lease accounting standards, we're joined by one of Opportune's longtime thought leaders with 12 and a half years at Opportune after being acquired in March 2009. Our guest today also brings a history of using software applications to help companies comply with their accounting standards. So I'm pleased to welcome Mr. Dave Loucks, Director at Opportune. Dave, great to have you on. How you doing today?
It's nice to be here. Thanks, Daniel.
Yeah, absolutely. Real pleasure getting to chat today. Thank you again for giving us your time and obviously your industry expertise on the conversation today. So let's start here. Briefly, can you provide an overview of what the 842 ASC lease accounting standard entails? Who specifically should be in the know and what compliance timeline people should be aware of there?
Yeah. So this is a goofy one because it really has changed and they started talking about it way back in 2010, and they finally got it for public companies. We've had 2019 and 2020 have already been, reported on by the public companies and audited by the auditors as well. And so it's really the private companies that need to adopt here in 2022. And it's really kind of funny because you really don't have to do your interim disclosures until 2023. But, you probably should get going with it and be ready, come 1/1/2022 with this one. The big thing with it is any lease that's greater than 12 months, whether it's an operating lease or a finance lease, which is different than the old terminology where we used a capital lease. The operating leases need to get put on the balance sheet with, through some math, right? So you have to do something. That's the big thing with this, is that because the math changes, you have to record something. One of the things is we've been going through this with companies. I received some good constructive criticism from a client where they said, Dave, you got to make sure you also talk about the short-term lease part of it, which is just a disclosure. So, with us, with the software, we're a little more, focused on, hey, what's going on with, what actually gets booked and gets put in the software. And I always have to remember, hey, you're going to have to change your procedures with the short-term leases to get that disclosure in as well.
So the FASB moved towards the model of public companies adopting this new standard first, and then private companies were supposed to get another year to adopt. This was mostly because of COVID crunches to the broader industry, but this was supposed to allow the private companies to learn from the public companies and what worked well and what didn't, and take some of that and apply it strategically. With leases, the FASB in October 2019 again decided to give private companies another year. Then they decided to delay the adoption to periods beginning after December 15th, 2021. Can you give us a little context again, Dave, on why they delayed again for a second time? Just lay that out for us.
Well, it was COVID, and I think I may be the only person who wasn't happy that this didn't get adopted when it was supposed to. The regulators actually just said, hey, let's give another delay with since we don't know how people are going to get together. And it's turned out to be a good thing, and not it's given some people some more time to deal with this. But I'm ready to go and sell some software here too.
I love that. And we'll get to the software component a little later in the conversation. Again, as a refresher, the deadline to comply for private companies, you said that's 1/1/2022?
Yeah, you need to adopt as a 1/1/2022. You can early adopt. And really the first disclosures that you must have are in your audited financial statements for 2022. So that's where you get into this funny part of, okay, when are you going to do this? What do I need to do now? And, what could I wait on a little bit? Obviously, we want people to be there. And I think, from the financial statement disclosure standpoint, I think all the boards and management of companies, really would want to be ready to be adopted at 1/1/2022 on the private company side.
Sure. And we'll also offer some insights into what that timeline looks like, right? 1/1/2022 sounds kind of far away, but actually the way time moves nowadays, it's right around the corner. So got to be some steps being taken proactively to really make sure that you can meet that deadline. So before this deadline to comply, let's break down those steps, right? What are some of the key steps that you see private companies needing to take now before implementing to ultimately comply with the new 842 lease accounting standard? What does that timeline look like?
Yeah, the biggest thing is you have to figure out what your population is, right? What do you have for leases? And it's actually really surprising on the oil and gas side how few leases a lot of the public company oil and gas companies actually have. I've been shocked by that. I may be living a little bit in the past and show my age here a little bit, but I remember back in my public accounting days, one of the biggest days that there was when you got a new computer, right? So I was kind of anticipating we'd see a lot more IT assets be leased, and we really aren't. And so it's pretty interesting to see how few leases a lot of these private companies are going to have. It could be 25 or less, it could be 100 or less. The count's really driven by kind of what you do with your vehicles and the vehicles in the field, right? Do you have something like that's a fleet? That's going to increase your count. Otherwise, hey, it's a lot smaller count than what we originally thought.
So part of the context of our conversation, obviously, is companies, obviously private companies, haven't adopted this standard at scale yet. So what advice would you give for private companies that have not started their ASC 842 implementation, right? The deadline is approaching, the clock is ticking. Where do they need to start to get ahead of this change and actually achieve that transition in, 4 months, basically?
Yeah, there's a couple of things where you should really start. One is, really look at your commitments and contingencies reporting to see what you actually had in there where you've committed for longer than 12 months, right? And, we all know an office lease is going to be part of this. You can get into some of the nuances of, hey, is this a lease or not? But I think, it's really just as accountants, we know what a lease is, right? It's important when we talk to the operations people, and it is really important to get them involved, to ask them, hey, what do we rent out in the field, right? And notice that I use the word rent, not lease there, right? Because, hey, that lease, especially in the oil and gas world, that's, what our oil and gas properties are. Like it's an oil and gas property lease, but that's not part of this. And so it's really kind of funny how this all has come together. And so in the oil and gas world, we really want to make sure that we say, hey, what are we renting out in the field? What type of equipment is it? And so when we help companies with this, we really, start at the drilling site and kind of walk through the whole process to, delivery of the hydrocarbons, to whoever the end user is, whether it's oil or whether it's gas, all the way through the system to figure out, hey, who owns this? Do we own it? Do we rent it from somebody? Who do we pay to use that piece of equipment? And is it, a lease that actually does need to be recorded? And is it something that, is less than or between 30 days and a year? So it's the short-term lease disclosure as well. So there's some complications to this. And it's one of these, we got to get rolling with it, right? And just get the process moving.
Now, there are some private companies that have begun this transition already, ones that tried to get ahead of the incoming deadline. So for those companies that have started moving to the ASC 842 lease accounting standard, what do you see as potentially some of the biggest challenges on the horizon that you think clients should start addressing now as they continue to implement, right? Where there might be some roadblocks or some choke points in achieving the successful implementation?
Yeah, the biggest one really is that short-term lease disclosure, and you're going to have to change how you are recording it to capture what that is. So you're going to have to add a couple more general ledger accounts to this, and possibly kind of change the way that you're recording it. Which, anytime you change something, that's hard. It's going to create a bottleneck, and somebody's going to do it the old way, right? And so to kind of watch that through and figure out, hey, how do we capture our population? Because, they're continuing to do business, right? So, hey, we've added a new lease in. How do we know that that's there? What's the process? And, and get to 1/1 and move forward. And this is your new process. It's going to change from that moment forward, just like we had with revenue recognition, just like we had with ARO, any of these new standards that actually, change how we do things.
So let's draw some examples out to offer to our audience if there's any private companies out there listening and gearing up for this transition. Like we mentioned, public companies have had this transition locked in for years now. What are some of the most interesting leases you've seen under this new codification? And what learning lessons can we apply for how this is going to be applicable for private companies?
Yeah, it is interesting, and we do keep thinking that we're going to see the leases actually change, right? A little bit in the format, with landlords and others really looking at it. We haven't seen that to date. It's been a little bit more, the economic conditions, right, that have changed, terms and put some interesting terms on the lease. Like in Houston right now, I've got a couple of groups that have like 2 years worth of free rent, right? And that complicates the accounting and complicates the new lease accounting with it as well under 842. And it's just one of those that, you got to understand what the terms are, know when you're actually making payments, and, read the lease to know what's actually there. There's also some, where companies will, have long-term surface use agreements out in the field, and they may make. I saw one that has a payment on day 1 and a payment on year 10, and it's for 20 years. Again, that's just kind of interesting payment terms, right? And it kind of creates some interesting accounting entries under 842. As we move forward with this.
So even though public companies have been complying with Topic 842 now for a few years, do you think how companies show how they comply will continue to evolve? Yes, no, why or why not? And how should these companies stay up to date on potential future changes if they do come down the pipeline?
Yeah, you know what? Again, I'm going to put the software bent on this one, right? Where, hey, when you put a new software program out, it's in beta, right? And you're trying to comply with what you know at that point in time. As this gets audited more, not only just from the public companies, but also on the private company side, as the PCOB and the SEC, look at, how the auditors have been auditing this, and what does need to get kind of tweaked, there will be some new guidance that's out there. It's kind of the standard ways of keeping up to date, right? Where you gotta know from people in your network, hey, this is what's going on. Know from going to conferences and things like that. And hearing speakers actually talk about, hey, here's something new that you really should be thinking about. And then, having, qualified, advisors who are there helping you along. Because, there's so many accounting standards out there. It is really hard to comply with all of them all the time, without some help along the way.
I want to introduce some other timely points to our conversation. One of them is the transition to remote work. Obviously, the pandemic initiated this major shift and validation in the number of employees working remotely. And with lease negotiations continuing to occur frequently, particularly for real estate, I was wondering, is remote work complicating the efficacy or the efficiency of lease negotiations? Yes, no, and what's been the impact?
Yeah, it definitely does, right? And companies really are looking at this and saying, hey, what do we really need for office space, right? You have to think about the evolution of the office space over the last 20 years, right? Where you went from having huge file rooms and all the paper that, that we had and for the history of what's going on with the company, right? And now all that is stored electronically, right? So it really has changed, and what the footprint really needs to look like, is different. And, there are definitely some jobs that probably don't need to be in the office all the time, right? And so I think we'll continue to see, the actual, real estate footprints really change over the next couple of years. And, less and less office space actually is going to be required. And when there's less demand, obviously prices go down when the supply stays the same, right? That's just simple economics when you really get down to that one. It's going to continue to be a lessee market here, at least for a while. Don't think we're going to see a whole lot of cranes building a whole lot of new buildings in any of the oil and gas cities anytime soon.
Now, do you see this impact on lease negotiations complicating audits as well? Why or why not? And how should companies get ahead of this potential impact?
So the big thing with this is that, if you have additional optional terms that are out there, I don't think anybody with a straight face right now can actually say, hey, I know, for sure that I'm going to exercise that option to take, this space, for the next 5-year term or the 5-year term after that, like what we used to see, right? Where, hey, the original term was 5 years and there was an option for another 5 and another 5 after that. I think what will actually get recorded really will just be the initial term, because no one can say for sure what the future actually holds, and I think that's what COVID did to the lease market.
And there's still a lot of uncertainty around the impact of remote work on commercial office space, for example. Some real estate experts and landlords have actually reported an uptick in interest in short-term leases because of that uncertainty. Are employees going to come back? Is there going to be another variant? Are we just going to need to, rent out this space to another company, or do we abandon the space entirely, right? So how can companies account for leases with a term of 12 months or less? What kinds of complexities are involved when you shorten the lease length like that?
Again, that's all that short-term lease disclosure, right? So it's not going to get booked, on the balance sheet, but it's the disclosure that you need to make on that. And I think it is going to be interesting to see, if with some of that short-term stuff, like, hey, where do the WeWork office spaces, do people actually go to them and try to take on more of those short-term agreements, right? Rather than having something greater than 12 months.
We've been talking software, so let's go ahead and bring that into the conversation more intentionally. But a major part of this transition is making sure you have the right tools for the job. So when it comes to having some support, right, whether that's more teams, or really, in this case, investing in a software tool, how many leases does one need to have managing at any given point before they actually need software support? Is there a metric that you typically advise?
Yeah, the math behind this is actually a fairly simple amortization schedule, right? And I think most accountants would say that. Now, where it gets harder is how does that actually work into the disclosures, right? So even if you have one, if you can get the value out of catching what the disclosure amount should be and how that disclosure should be set up, there's some value there. I really think if you have 5 or 10 and upward from there, it really does make sense to have a software tool to accumulate all those disclosures, right? You can't have, if you had 100 vehicles, have 100 tabs in a spreadsheet and know that you've picked up every single one of those in a spreadsheet model that you have. You really do need software on that end to make sure that everything is rolling up correctly.
So if it's that useful from the get-go, what are some strategies or some tips you would offer for selecting a lease software tool, right? What do you actually need it to achieve? What are some of the metrics that you can use to identify, is this right for me? Is this not worth the investment, right? Go ahead and offer those for us.
Yeah, it really does come down to, hey, how many do I have? What are the disclosures that I actually, need to make around this? And what types of leases do I have? Do I have just operating leases? Do I have some finance leases as well? And, I think you need to, find a vendor that works for you and that, you can call and ask questions of. They're going to be responsive on the support line. They're going to get back to you and they can explain, in accounting terms, hey, this is what's going on here. It's kind of interesting. One of the harder things that we've had to deal with is modifications, because it's a very specific modification part of the standard. And it's interesting because we see a lot of people actually making corrections using the modification tool, which actually gets you to a different answer. And that's a little bit harder to deal with. So you really want to understand how they deal with modifications, when you would actually use modifications. And again, I just can't stress, hey, how do they support the product, and how quickly did they get back and answer your questions?
I want to harken back to an old adage from the auditor world. I'm sure our audience will enjoy this one, but liability is all about completeness, they often say. So give me your tips here. How does a company actually prove the completeness of its solution and of assisting in the auditing process?
Yeah, they really need to make sure that they get the other departments involved, right? They have to have meetings with the operations group and be asking them, hey, what are we renting out in the field, right? They have to get together with the IT people and, ask, hey, what kind of a communication equipment is in the office? Like, we kind of work it from, visually, right? Kind of from the desk to the cloud. And, in the office to kind of work that through to say, hey, what do we rent in the office, right? The phone system, office equipment, what's in the break room, all that kind of stuff, right? So, you have to, and one of the things I always say as well, too, you have to show your work like you're a fifth grader, right? We all knew what the answer was in the math test in fifth grade, but unless you showed your work, the teacher thought, you were wrong, right? So you have to, go through and show those steps that you've done to actually make sure that you have a complete population.
All right, we're just about done with the conversation. Thank you so much for your time so far. Last main question I've got for you is peering into the crystal ball. One of my favorites. We're going to look ahead a little bit. So what do you see as some of the core market trends or regulatory dynamics, really anything in between, shaping future updates to lease accounting standards? And how should that inform some of the transitions today and investments happening today as well?
Yeah, it is kind of interesting that market trend wise, again, we really haven't seen the quantity of leases that I was anticipating when the standard came out, right? And the secondhand copier and printer market must be a lot bigger than what I thought it was, since a lot of those are owned as well. And I think you're going to continue to see more companies actually looking at some of these pieces of equipment that were rented before, and I think you're going to see them buy a little bit more because the accounting is going to be easier. And that's interesting to me when you start thinking about it from a use of capital standpoint. But I do continue to see that, and again, all the fleet vehicles, you just kind of thought all the vehicles were just leased, and they had a fleet manager that took care of them, and I'm really surprised at how many companies actually own the assets, and I think that is something that's going to continue forward, and somewhat in relation to this, to the standard, right? Hey, it's already on the balance sheet. If we own it, it's really no different than the lease. So there isn't a benefit of leasing it right now.
And I'm sure we're going to be seeing a lot of these changes come through the pipeline in years to come. I mean, considering the transitions even from ASC 840 to ASC 842, we continue to see updates and adjustments to some of the little loopholes or some of the market trends that shape what are today's lease needs, right? So as we continue to prepare for those changes and adapt to the ones that we're facing today, we're going to continue these conversations. But till then, Dave Loucks, thank you so much for your time today. It's really been a pleasure breaking this down with you. Again, we've been chatting with Mr. Dave Loucks. He is a director at Opportune and has been with Opportune now 12 and a half years. Dave, if folks want to find out more about some of your thought leadership in this space, or they want to get in touch with Opportune, get some more tips and tricks, how can they get in touch? Where can they learn more?
The website's always the best, opportune.com. They can always call me or call the main line and get a hold of me. I'm always ready to talk to anybody these days. So that's what I do.
If you want to get a hold of Dave, make sure you shoot him an email at dloucks@opportune.com. Again, that's the letter D, then LOUCKS at opportune.com. dloucks@opportune.com. Dave, thanks so much for your time. It's really been a pleasure chatting today.
And thank you, everyone, for watching another episode of E2B, Energy to Business, an Opportune podcast. If you like what you heard and saw and you'd like some previous episodes, or you want to make sure you don't miss out on future thought leadership from the industry, make sure that you're subscribing on Apple Podcasts and Spotify, and head to our website, opportune.com. I'm your host, Daniel Litwin, and this has been another episode of E2B.